Assalamualaikum and salam sejahtera. Welcome to XM Pipcast, the show where markets meet minds. I'm Zuraza and today we continue our journey into the world of trading, not with charts or numbers, but with stories, strategies, and raw real conversations. I'm joined by our very own Ibrahim Osman, educator, market analyst, husband, father, Chelsea. Why? Never mind. Afterward, we'll be chatting about smart money concept, how the pros move the market. Welcome to the show, Ibrahim.
Thank you, Mr. Dudi.
All right, Ibrahim.
Yes.
We start off with what is SMC?
Okay. SMC is a smart money concept. It's basically it's the way we're looking at the market through institutional players' eyes. For example, like bankers, hedge fund, and maybe it's a large financial institution. See, the SMC tell us about the liquidity, especially, and the
Where the orders are. You
yes,
say
of
where are
course.
the orders?
And then actually it's answer about why we want to trade first. Why the market is moved. That's the first thing the SMC teach us regarding market switch also. So I think that's the real meaning of the smart money concept.
Okay. I'm very, very familiar with Wyckoff.
Yeah.
Okay. And I know that SMC is a further elaboration or a modern concept of Wyckoff. What are the differences?
See, the smart money concept, some people are calling modern Wyckoff. And the main difference is Wyckoff got some phases. And of course, the terms also is different with the smart money concept. But smart money concept just focus for liquidity and manipulation. If we focus. But if you want to learn about smart money concept, the first thing we must know about liquidity, and of course about market structure shift. That's the main thing about the smart money concept. But
We're talking about shift. We're talking about change of trend.
Yes, of course. Change of we calling in smart money concept as a change of character. But in Wyckoff method, of course, we have a lot of terms, and it's more detailed rather than the smart money concept.
And can we say that Wyckoff is looking at more of the long-term trend and the why compared to SMC is looking at the smaller time frame and where to enter?
Yes, I agree about that. Because Wyckoff is looking for the long term and why price is moving. Rather than smart money concept, also we get the answer why, but it's more narrowly we will see the why price is moving in short term. So let's say we using Wyckoff for the daily chart or something, but in smart money concept we can using a smaller time frame also. That's the main difference.
Of course, Ibrahim, we've been in the market. You and I been in the market for a long time. Me, myself, more than, I don't know, 97.
Yes,
now
you are my Sifu, right?
No. When did you start trading? When
2010.
So 2010. So we experimented with so many techniques, so many strategies. What appeals? Why SMC? What make it? Why SMC basically?
Okay, I think only smart money concept is the one of the concept or techniques that I think makes sense. Because why? Since I start from 2010, I just one answer only. Why price is moving? See, let's say we are using supply resistance or other methods, even indicators. Maybe we know it's moving because of momentum or any other reason, but sometimes it's broken. See, only smart money concept give me the answer that price is tenderly moving because liquidity. That's why sometimes the support is broken, the resistance is broken. Even our indicator is not working. So only smart money concept tell that price is moving because of liquidity. Not because indicator, not because some analysis give you huge analysis. No, like that.
So easier for you to interpret what you are seeing on the chart.
Yes. The first thing, we no need to see a lot of indicators or the trend line or something. We just focus which in liquidity is nearby. That's all. And the other terms that I think very important in smart money concept is like fair value gap, liquidity gap, and also I think another one is nowadays is top. We call AMD. The power of three. Accumulation, manipulation, display. I think in Wyckoff method also we get.
Basically, everything started from DAO.
Yeah.
So the 4 phases in DAO: accumulation, distribution, and so on.
Yes.
And later on applied to Wyckoff, later on, and of course SMCs.
Yes.
What are the different? I see the terms, for example, inducement. That's basically fake out.
Yes. Actually, inducement also liquidity.
Yeah, there's also liquidity.
Inducement.
But the different direction, change of direction.
Yes. Let's say we see the inducement. So as a smart money concept trader, we will know that it will be taken. But if let's say in other concept, let's say Dow theory or any Wyckoff method, we know it will taken, but it will take phase or time. But in smart money concept, we will waiting it taken maybe in the smaller time frame. Like I think is a main different about that one.
Earlier.
Meaning yes.
You detect any move earlier.
Yes, as what I'm saying earlier, that we will using smart money concept more to smaller time frame or even in 1 hour, something like that. But in Wyckoff method, you know, right? Because it's got phase by phase.
Yeah.
That's
So who should use SMC?
I think, of course, from
Is it for somebody that is intraday trader, scalper, swing trader, position trader? Who should use?
Actually, for this question, I think of course all traders, because we will focus for the liquidity. But I think the best is intermediate first. I mean maybe intraday. Because why? If even we looking for a smaller time frame, from my side, I will looking for the daily bias first. Because why? Every day we have a previous daily candle. So high and low previous daily candle is a liquidity. So it will be biased first. So I think the best is the intraday trader. Rather than we focus for the scalper or the swing trader.
So somebody, what is a typical day for SMC trader? What do you do every day?
Okay, first I will looking for.
Of course, apart from looking at the EPA result, but what do you do every day?
So for EPA result, I will put aside.
No. We put that aside first.
Yeah.
Put that aside because my team is not doing very well this week.
But at the end point, I want to add that we are
cancel.
Okay. So first, I will looking for the daily bias because for me, let's say.
What time? What is a good time for you to analyze the market?
I think the best is after London Open. Because we have let's
so
say we have
your daily candle is, are you talking about New York close or is it the London start or Asian start?
Actually we will looking for previous daily candle. This mean
just previous, the New York.
Yes,
okay.
correct. So we will looking for previous, but because why? Asian session, we know the high and low of Asian session actually is liquidity. I said that's the one point. And
that's the range of liquidity.
Yes. Around 2 p.m., we know that the overlap session. So the best is, of course, after we start lender session. But still, we must understand that volatility start from lender session until start of the US session. So my best time is after, normally mention time is 3 p.m., something like that. So it's the best. Let the manipulation run first. Then we focus which direction we want to look. For example, let's say it took out the Asian session high. Then I know that maybe
the direction is there.
Yes, that's the direction. Or it will reverse. So that time what will happen is we call liquidity grab or turtle soup in smart money concept. So let's say it's happened, then we know it will reversal.
So what basically SMC is, you wait for a break and price to go back to your liquidity level.
Yes. First, we must wait for the break. But see, the breakout also have a manipulation there. We call fake out, right? Because sometimes it just left the shadow only. Sometimes breakout of a body. So what it doing? That is the very important. For me,
So what's the time frame like? Are you talking about M30 or H1
as I'm said,
for intraday? For
yeah,
intraday.
from buyers, of course, I looking for daily, same. But for intraday, I will looking starting from the 1 hour chart. The best is 1 hour, or if you cannot see, then you switch to 4 hour chart. Then you can see clearly. But for entry, you must refine. That means you must go to, I think the best time frame for intraday or scalper also, I think M15. And it's a top time frame, I think, nowadays. And then you must see whether which side got liquidity first. Rather than we see the price moving. We actually in smart money concept, we don't care about where price is moving. We just care why price is moving. That's all.
How do you identify which one is more important? You have the direction, you have the entry, and exits. So entry versus exit, which one is more important in SMC?
Of course, exit.
That's
See,
where you make or lose money.
Yeah.
If you are wrong, you are wrong.
Yes,
How do you identify exits? You identify the direction from the daily trend, and you identify you identify the entry point from the breakout, and the liquidity. That one. How do you identify exits?
Okay, I give you one example. Let's say I want to I look or I identify that I got buy a bullish order block. Let's say, so I know that price maybe will come to the mitigate with the bullish order block. Then it will move to uptrend. But let's say it's broken because maybe got fair value gap below. So that is
looking
my
for
exit.
another level.
Yes.
Yep.
So that's why the important there is refine. That means after you looking in one.
That's why you go to lower time frame.
Yes. So after you looking the direction or you looking liquidity in H1, let's say, then you refine to the M15. Maybe you looking liquidity or fair value there, but maybe you got more liquidity in below in M5. So that's why
how low should you go? Say you look at daily, then H1 is your major time frame.
Yes.
Then how low will you go? 2 time frame lower, 3 time frame lower, or 1 minute? If not, I go crazy. Whole day look at chart.
No, because if you want to analysis more than 3 time frame, for me is crazy. Because
So when you're saying 3, you're talking about M30, M15, and M5.
Daily first, H1, and then M15. M50 is my entry point. But if we want to go more lower, let's say M5, M1, and nowadays we have until
Tick chart.
tick chart. So I think that is not practical. So for me, we just my style is entry in M15, and I put SL below the liquidity. That's all. But let's say the price is going there. That's the importance of the exit.
And how did you identify the take profit point?
That profit point is normally I'm looking for the just for profit, not for pips, because we know we not trade for pips.
Yep.
We trade for the profit. That's all.
So next level.
I think profit normally we looking. Let's say I give you another example. Let's say we looking for same like a bullish order block, and the price is moving. So in smart market concept, we have 2 types of liquidity also. We call internal liquidity and external liquidity. So order block is one type of external liquidity. So after it's taken out and it's moving upward, so we will looking for take profit level at the fair value gap. Fair value gap is the internal liquidity. So that's how I put the
basically liquidity to another liquidity.
Yes, correct. Yes, price is moving because liquidity. There's no other reason for me.
How about time? Say you are intraday trader. You waited, or you wait for price to move the whole day. It's 11 p.m.
Okay.
Not reaching your target.
Okay.
Are you going to exit?
Of course, I will wait first.
Your wife angry with you.
That's
You've been sitting in front of chat from 2 p.m.
That time wife is important. That time wife. Okay.
So,
Oh, you go to outside.
you've not sleep on right.
Yes, yes.
Or sleep your chats.
No. See, sometimes
All of us traders been through that. Yeah.
yes, before become trader, right? Okay. So, see, the main thing is we must wait for our zone. That's the biggest problem.
But say it doesn't reach. Price really moved sideways during the New York session. London closed already.
Surely I will wait. That's the
3 a.m.
I have to wait because why? We are trading with our system. Not like we just see
No time cut off.
No
Just
time
your
cut off.
TP.
Yes.
How about managing? Say you cannot wait in front of the chart. Is there any trading stops, or are you going to put break even point? How do you do that?
Let's say we not entry yet. Yes, of course we can put like pending orders. But in smart money concept, normally I'm not suggested like that because why? Sometimes the order block can broken. Same.
Yeah.
And it become like a breaker block. We call it a breaker block or mitigation block. That a switch of a market structure. So for me, I will wait. I like or not, I must wait.
So you're talking about sitting in front of charts?
No. Maybe, of course, we
Just putting
nowadays,
the limit. I mean, just putting the stop loss, the TP.
Yes,
Yeah.
maybe. But let's say we are in the trade. Let's say we are entry ready or our entry is trigger ready. So of course, that was easy for me because I have my money management. So I will put the exit and TP. Earlier. But let's say the price is not coming, so I have to wait. Because that's the problem. That's why I'm saying earlier.
So your intraday becoming a short-term swing.
Yes. But intraday, nowadays, that's why the importance of the time frame. Let's say we looking for order, what we call order block in higher time frame. We have to wait long time. That's why we refine to the smaller time frame. So maybe it can go faster to our entry point.
Okay, exit point.
Exit point, yes.
Okay, self-sabotage, Ibrahim.
Yes.
The repeating cycle of building, destroying trading portfolios. How do you overcome that? I mean, easy for us to talk about trading system, not easy actually to follow the trading system. That's why I'm talking about, I touch about managing the entries, the exits. How do you overcome that?
See,
That's the hardest part actually in trading. We can talk about all the trading system in the world, the best trading system in the world.
See, that's the importance of the awareness, the first thing. And I believe discipline is not come from the motivation or motivation quotes. I believe it come from the system. And the importance of the system is it teach you when and why and where to entry. That's the main point, because nowadays you see the major or biggest problem of
That is what I said. Easy for us to have a system, the best system in the world, the entries, the exit, how to manage, but actually to follow that,
that's the problem.
that's the problem.
Market is
How do you overcome that? The one destroying our portfolios is not the technique.
Yes,
It's not the market, it's us. How do you overcome that?
see,
What can an SMC trader do to overcome the process of self-sabotage?
one the main point that SMC teach me that I think I overcome this type of problem is you must wait for correct zone first. Because
That's the problem. The market move already. I wait, it doesn't go back.
I think we must change our behavior. That one we cannot do anything.
Because that's typical. But I mean, if you are sitting in front of charts, waiting for setup, and you waited for 2-3 hours, the price been moving, not coming back.
Yes. That one.
You know what I'm
I understand that one. That's why the we call the discipline for that one. So that's why I said earlier.
So market execution or limit order or stop order?
I think the best for the smart money concept always is the market execution rather than pending orders. That's what, because why? When the price is coming, even though we know about smart money concept, we know about liquidity, but we still must know one thing: the liquidity anyway. And sometimes the decision of the institution players is maybe different. Let's say we see liquidity in H1, let's say, in a bullish zone, or we call a support zone, right? But let's say the institution is changed their mind. So how? So the best point is execution for me. Let's say we put a pending order, but the institution changed their mind.
How do you detect that? How do you detect them changing their mind?
Of
The
course,
structure?
yes, of course, the structure. That's why we
I mean, the lower time frame structure change.
Yeah. The smart money concept, we have two main understanding about the structure. First, we call a break of structure, BOS. The second is the change of character, CHOCH. So both have a different. And then the main problem is the change of character. Because from order block that we marked earlier, it can be a breaker block. It can be a mitigation block. So that's the main reason why I'm saying that we must do a market execution rather than pending order.
So basically reacting to what you see on the chart.
Yes, but I'm agree with you regarding trading discipline just now.
The problem with trading is a skill.
Yes.
It is a skill. And even the best, for example, Usain Bolt, sometimes he runs, I think I can run faster. Sometimes. When Usain Bolt is sitting down and I'm running. So I might be faster than him, right? But it is a skill. So your skill will be up and down depending things, for example, your mood, your situation, your surroundings. So it can be up and down. And when you are when you have that skill, but sometimes up and down, so it can change your performance.
See, because I'm also long in this market. So what I can say that, of course, it take time. We cannot say
to develop the skill.
Yes, of course. We cannot say for the newbie trader or noob trader, right? So we say, oh, you must be patient, right?
It's hard to do. Right?
Hard to do. So
how do you plan the trade and putting the plan in writing or in videos? How do you...
Of course, for journaling. That's why in my topic also is more to journaling. Because why journaling? Maybe some who watch this one, I just want to say one thing. Journaling actually is short your time. That
learning curve.
Yes, learning curve. What we call from boom and burst, like that. Okay, so because why? It improves your skill first and let you discipline trader. Because why? Let's say I give you an example. Let's say you entry some any pair, but you entry because you looking like it's going up without your system. So let's say you got lost. So what you can learn from there? The first thing, you cannot be rushing. You must follow the system.
So basically, you learn from your trading history.
History, or we call journaling.
Yeah, journaling.
Yes.
Okay, Ibrahim. Now we move on to the next segment of XM Pipcast, the rapid fire question. You ready, Ibrahim?
Ready.
Okay. What was your very first trade and how did it go, Ibrahim?
My first trade, yes, 2010. The first entry is profit. But not much. I think a few dollars. But because, of course, that time is still new
learning.
I then start from MC, and a few years, I think I lost a lot.
Yeah.
Yes, but that's the
process, the first one you make money already.
Yes, I still remember in one restaurant.
Restaurant,
you know, right? So that man, yes, I learned from other guys, and he said, okay, you're just looking for candle also enough. I said green, you buy. The red, you sell.
Simple.
That's so.
I wish every day that's simple. Okay, the second question, Ibrahim.
Yeah.
If you could give your beginner self, remember that the restaurant.
Okay.
One piece of trading advice, what would it be?
Mastery is come first. Profit come later. See, knowledge and skill is the first. It's not problem how long you trade. Is it 1 year, few months, or 10 years? But if you can't master about the market, or you don't want to learn about the market, I think you can't see easily about the profit. Or rather, I can say rather than profit, I can say consistency. That's the important.
Learning
I mean,
doesn't stop.
Yes. You must learn it. Until now also I also learning. Even nowadays I try to learn about more advanced about smart money concept, because got we call SMT. So that one is very tough, but I think that of course that's the mastery, right? So that is
So every day market teach us new things.
yes, and also beat us sometimes.
Yeah. You can't win. I mean, there's no such thing as 100%.
No, liquidity.
Okay, recapping back to what we touched so far, smart money concept, basically understanding what the institution traders, what institution do in the market, finding the liquidity, giving yourself a very clear picture of what is the big players doing. That's basically SMC.
Yeah, that's the true story of the smart money concept. Only one I want to say about smart money concept, you must understand about liquidity first. Rather market, Swiss, that one is so you can learn easily. But liquidity you must understand. Which one is liquidity, and you must know how to refine. That's very important.
That is going to the smaller time.
Yes, that's very important.
Okay, Ibrahim, and that basically wraps up today's episode. Huge thanks to Ibrahim for joining SM Pipcast and sharing his insights on SMC. If you enjoyed this chat, don't forget to subscribe, leave a review, and follow XM on YouTube and Spotify channel. Thanks for listening, and catch you next on XM Pipcast.